Welcome back, everybody. 25 and invested here, and it is the end of the year. I'm holding the microphone. I don't want to mess this up. My portfolio is at 80,000. At the end of the day, it was exactly $80,013, and then aftermarket $79,997. We're going to go through every stock that I have. This is going to be a little longer video. This is the end of the year. We're going to take a look at all the performance of the entire portfolio. I'm going to disclose everything. We're going to look at when I bought stuff, why I bought it, everything. Yeah, and let's start by talking about where I was at the beginning of the year. So if we go all the way back to, I guess, January 2nd. This is the furthest back I can go. January 2nd, 2023, the start of this year. I had $51,310 put into this account, and the total value was $47,300. I was down $4,000 right at the start of this year. I added quite a large portion of money throughout the year. I mean, obviously the accounts doubled, but I went from 47 to 68,000. So we added $20,000 this year. That's a lot. That's a lot of money. I guess 51,000, so 17,000 we added this year of my own money. That's the black line, and then the blue line is the performance. So over the entire year, we are up 16,000, just shy of 16,000. I believe I hit a high of 26% positive in the portfolio this year. All time, the whole portfolio is up 18%, or just shy of $12,000. And as we could see here, throughout the entire year, we did not spend too much time in the negative, and now we're spending quite a bit of time in the positives. So will that change next year? You know, maybe. Last year when I first started investing, we did have a huge drop in the stock market, and typically when there's a huge drop, the following years are a huge run. So, you know, playing it that way, we can see what happened with the portfolio. 25% in 1 year is quite a substantial, that's a very good year in the stock market. So, but everyone had a good year in the stock market. The S&P 500 did perform at about, I believe, 24%. So we did beat the S&P by about 1%. Not adjusting for dividends, we're probably basically flat with the S&P over the year. Going down this year, I did not add any money into Apple, and I did not add any money into Algonquin Power. Algonquin Power had a very rough year this year. If we go into it, I believe I'm down almost 40%, maybe even 47%, so almost 50% on this position. My average price is $16.06. If we scroll down, can I see when I bought it? I cannot. So I can't see when I bought it, but I can see my average, which I guess will be good enough for today. Damn, that's quite a hefty loss, almost half. And as we could see, that reflects in the stock price over the entire year. 1 year down 6%, which means most of my purchasing was before this year. So it was actually 2 years ago, but it is my worst performing stock this year, whereas held completely flat, and the dividends did not make up for that. Moving on, Alibaba. Alibaba has had a weird year. I believe they've been completely flat all year, down 13%, which I do believe is half of what I'm down now. I'm down almost 30% on Alibaba. That's still a substantial loss. 13% this year, 28% down all time. Another damn, you know, we're gonna get these two are, I believe, my two worst performing stocks. I have one more pretty bad stock, which we're gonna get to, but my two worst performing stocks was Alibaba, Algonquin Power. Apple, even though I did not add to it this year, it is up 48% this year, and I am up 33% this year. So if I can scroll back, I could see that I probably bought it at a fair price, 155, 144. So we could, you know, take a look. I bought this a year before, but I bought it on a hump. Nobody times the bottom of the market, certainly not me, but I bought Apple. I'm happy I did, and I'm happy I bought it at a reasonable price. So we did hold Apple all the way through this year. BlackRock was a relatively recent purchase that I had this year, and I timed this, and I was watching it for probably 2 to 3 years now. I've been watching BlackRock, kind of deciding when a good jump in point was. I bought 8 shares, $6,400 American. I am Canadian, so you know, you add 37% onto that because the Canadian dollar is bad. That is 11% of my portfolio. I am up 29, 20, 30%. I'm up 30% on BlackRock. You can see my average share was $625 per share, which kind of, you know, it's not the bottom. By any means is it not the bottom, but it is during a substantial dip. I seen that it was coming back up. I did have it set at $600. I do believe I missed that. So this was a stock that I chased, but not by very much, and I'm happy I did. It is one that I wanted in my portfolio. I think I have a lot of stocks in the financial sector, as we will see as we keep going, but I'm happy I have BlackRock. I think that the CEO, his values are in line with mine, which is make money at all cost. I like BlackRock. Happy I'm here, and yeah, I have no regrets about BlackRock. BN was probably the last large buy that I had this year, and BN I bought $5,300 worth, 100 shares. It ended up being 100 shares. I was actually down on the position, about 16% down in the negatives on this position. At some point I averaged into the stock, so we could take a look. My average is 47.05. I'm up 13% on the stock, so up $600, my 100 shares. They have a very small dividend, but they do have a dividend, which that's pretty good. I always look for between, you know, 1% and 3%. I don't want too much dividend, but I do want a little bit. I do like them. And yeah, I a stock that I averaged down in. So a stock that I seen over the year, over the entire year, it's up 22%. I captured 13% of that. So I wasn't able to capture the full move of the year, but I was able to capture a large piece of it. I'm happy with what I have. I'm happy with the value play that I'm deciding that Brookfield Corp is, BN. So BN has been added to my portfolio this year. Bank of Nova Scotia, that was this year as well. I bought 30 shares, a dividend play. I wanted Bank of Nova Scotia. It's a bank that I personally use, so I'm happy that it is also a part of my portfolio. I was looking forward to this because the conviction, I believe Bank of Nova Scotia is detrimental to Canada and that they will stay and that I should own them. So I am also down 2%. That is not adjusted for dividends, so that's 2% on the stock price. After dividends, I'm probably up only like 3 or 4%. They pay a pretty hefty dividend of 6.5%. So yeah, over the entire year, not bad. I did buy them, I guess, not when they were the lowest, but when they were fairly low compared to their 5-year average. But on the 1 year, they're down. They're only down 3.2%. So I'm actually doing better. I'm actually up on the year for Bank of Nova Scotia, if that makes any sense. Even though they're down for the year, I'm still more positive than they are down. So that's not bad. It is what it is. Berkshire Hathaway. This is a stock that I keep saying that I will buy more of. I would love to buy more. I would love to buy more Berkshire Hathaway. It just does not come down to my buy area that often. And it is a price that I'm readjusting as I go. It's hard. I'm trying to buy it at a price to book value of about 1.3 Right now it's sitting at 1.5. So the price to book value is 1.5. I think that's expensive for Berkshire Hathaway because it's a holding company. That's the way that I'm deciding that my easy way to value it will be. And last time I bought it was quite a while ago. I do not believe it was this year. And I bought it at an average price of $276, 27, I wish, $276.50. And I would love to buy more, probably at $330. Probably 300 to 330 is the price that I would like to add more to this position. This is one of the only positions that I'm really itching to add to. That and Xeqt, which we will get to later. And it does also, the total value is just shy of $4,000. I'm up 29% on it. Not bad. Not bad at all. I mean, it's Berkshire Hathaway. I mean, when Warren Buffett croaks, I mean, we'll readjust it, but I believe that might already be priced in, just like Charlie Munger this year, which is, somebody that Berkshire Hathaway, and I guess everyone in investing has lost, a teacher and a guider for most, and certainly me. So it's sad. Cash was the last buy this year. That was the last thing that I bought, and that was only this month. I bought 158 shares in cash, or $7,900 in cash. This is a high interest savings ETF, Class A shares. It just pays me monthly. They hold a lot of different high interest savings accounts through other banks, and that is an ETF that you collect interest from. I believe the interest in it was about 5%, 4.98%, so 5%, and I don't believe I've been paid from them yet. So it is also almost 10% of my portfolio. 10% of my portfolio is in cash, and I will be expanding that cash position this year because my TFSA will roll over and I will be allowed to add. I'm not too sure how much, but I will be able to add to this account. 10% cash is quite a large amount of money to be holding in cash. Probably the reason why I'm seeing more gains this year than last year is because I've trimmed down on the cash position throughout this year. I made a lot of buys at the beginning. I guess I made most of my buys last year when things were quite a bit lower. Caterpillar stock, I'm up 48%. That is one share. That was a tracker share. So even though I did see Caterpillar in the negatives, I believe I was at most minus 18% on Caterpillar. I did miss my chance. It's a shame. I'm not too sure what happened there. Probably my only real regret of the year was not paying attention. I own a lot of things, and that is not an excuse, but that's something that I need to be aware of. So, lesson learned. I've been keeping a closer eye, at least making sure I go through every stock that I own every week, just to keep up with what's happening. Just a brief look. Dollar General Corp. I bought that this year, and I bought it at a pretty bad time. I wish I could see the time that I bought it, because I bought this and I was almost 20% negative within 2 weeks. My average price is $126, and if we go to the yearly chart, we could see that it did hit $102. So at some point I was down $24 per share. So that's a lot. It's a lot. It is only 12 shares. That is I guess a full position, because it is American. That would be almost 2,000, or a little over 2,000 Canadian. So that is a full position for a low conviction play. I like Dollar General. They had a fantastic business, and they had a switch up of CEOs. They had a large struggle, and that, I believe, was a time to buy them. I also seen that they were buying their own shares back pretty extensively. So that was my pull the trigger moment for Dollar General this year. And yeah, I'm up 7.06%, $107. I'm up on this position. Dream Industrial is a company that I have not been buying, but I've been reinvesting the dividends back into. So I did tell myself a little later in the year that I will be reusing the dividends to repurchase shares of Dream Industrial. I ended up putting most of that money towards Dream Industrial and not Nexus REITs, my other real estate investment trust. That's because I had a little more conviction with what Dream Industrial was doing. Dream Industrial is up 10.6% overall on the position, but on the yearly, they are up 19%. So, you know, I didn't capture the full return of the year, but you also, I don't, you know, I captured most of it. Yeah, other than that, I will keep reinvesting the dividends in Dream Industrial. Dollarama, my wife. Dollarama, I'm up 80% on. This 78%. This is a stock that I have always complained about, just like Caterpillar, where it went straight up really quickly and it didn't stop, and I didn't chase it, and I also didn't have any money to invest in it. This was one of the first stocks I invested in back when my account was $500. When my account was $500, this was half of it, and I thought that was too much. You know, things change. Things change on my side, things change on their side. They did recently dip. They were $100 and they went right back down to 90. They are back up to 95. They are not my top position, but they were almost all year. Empire Co. Empire Co. had a weird year. They were down. I do believe I bought a little bit this year, and I do believe I bought it around $33, at $35 a share. Basically what it is right now, and my total cost average is 37.11, and I'm down 5.55%. This is a very small position, and I think this was a recommendation from a friend. They have a yield of 2%. You know, maybe I should be looking at them more often, but I'm not. This is, you know, a problem with such a small position, but I do run a portfolio where I try to keep every position for as long as I can. Empire stays. Google, the Goog, I'm up 20.38%. I do not believe I captured all the gains for the year. I believe Google had a fantastic year. Yeah, they are up almost 60% this year. I am up 20%. So I didn't capture all the gains. I do believe I was early on Google. I bought my first share pre-split, which means that it was, I believe, $170 a share when I bought it the first time. And then I averaged down from there, and I averaged down. My average is 116. That's pretty good. Considering I probably was on average before this year, but 150. I do remember buying more at 80, 85. No, it must have been $90. So I bought a few more shares of Google. Not the lowest. I believe it hit a low of 75. That would have been a great time to enter, but you don't know. You don't know. I was happy buying Google when I did, which means that I was happy buying it lower, and I did. So due diligence there, conviction. I bought more Google, and I have the whole position is just shy of $7,000, and I've made 20% or $1,200 on the position. I'm rounding up. Home Depot, I did buy one more share this year. I do have an average of, we're not actually going to go into this one. I'll go into the bigger ones. Yeah, I'm not sad. Google was lower than when I bought it. I bought more. I would love to buy more Home Depot. I go to Home Depot a lot. I'm a tradesman. This is a stock. This is my stock. I think Home Depot is a fantastic business. I love going to Home Depots. It's basically like going to Toys R Us for men. I would love to have more into Home Depot. They do a good job of buying back their own shares. They do a good job at managing their balance sheets. I just need to find an appropriate time to buy. And I didn't see that this year. I seen it once and I didn't see it again. So that's how it is. Intel. I am up 49% on Intel. That's pretty big. This year, Intel is up 91%. So again, I captured a little over half of the gains that they made. Therefore, I'm happy. You can't time the bottom. I certainly can't. So to capture at least half that, I do believe is still a solid plus, especially for a company that I plan on holding for a very extended amount of time. I'm not disappointed. I bought 65 shares and I kept averaging down on this stock. I do believe I was down about 40% at one point in this stock. So I seen a fairly substantial amount of volatility with Intel. It is 5.5% of my portfolio. I have made $1,000. I'm actually at least $1,000 positive on the position. I didn't make it. I didn't lock in any. I have not sold any stocks this year. I've only actually ever sold one stock in this portfolio, and that was Figs. And I made a bit of money on that back when I first started. It's a nurse clothing brand. I didn't know what a bad company was. I ended up buying that. Anyways, Meta. That's the top stock in my portfolio. I'm up 87%. Yeah, top stock, 87%. That's the best performing stock that I own. Let's see if I captured at least this year's gains. No, I did not. I am up 87%. Meta itself this year is up 194%. Damn. Wow. That's a lot. That is a lot. You can't time the bottom. Certainly not me. And I started investing in Meta. Again, I wish I could show you. I started investing in Meta, I believe, at about $280. So, I mean, if we go to our 5-year chart, I could show you. I probably invested there. And then it went to $100 a share. Yeah, it was rough. It was a bad position. I was down over 60% in this position. I did buy more. I think I started the position at 5 shares. Now I have 10. I'm up $1,600 American, which is just shy of 2,000 Canadian. Nice. I mean, I can't ask for more, especially for a position when I was newer, where I didn't, I didn't see that coming. This was the single largest drop in a company price and valuation ever. I mean, I remember seeing the pre-market, and I remember seeing that, and I had a limit order, not a market buy. So I ended up buying basically the top of that. Lesson learned. I still use limit buys. I think they're a nice tool. But I'm also, a little more wary of the pre-market now. I learned. That was a hard lesson to learn, but I'm happy I have Meta. I'm happy I've held it for a whole year. I didn't capture half the gains, but I'm happy I was around for those, because that's a lot. Manulife Financial. Manulife Financial, I'm up 28% this year. They are up 20%. So I had it a little longer than this year. I mean, I've had it for almost 3 years now. Manulife Financial, 1% of my portfolio, $2,000. This is just like my REITs, a company that I will be reinvesting the dividends that I got. I also need to go back and see how much I've been paid since I opened the portfolio to make sure that I can add the appropriate amount of shares in today's value. However, they have gone on an absolute sprint up. They're at all-time highs, at least highs in the past 5 years. So yeah, 4 years ago they were $27. Now they're $29. So they're also a dividend paying stock, which is the reason why I added them in the first place, but they just keep getting better. Manulife Financial. Microsoft, I bought this year, and I bought it just before the AI buzz. just before the AI mania took off. I am up 42% this year. They are up 56%. So I didn't see the AI thing coming. I had no idea about AI. I still arguably know nothing about it. I mean, I've used ChatGPT a few times. It's okay. I used it a few times and I just kind of threw it by the wayside. Not very useful for me. But Microsoft, damn, they did well. They did well, and I captured almost all the gains for the year. So that's, nice. It's also a stock I averaged down on. As you can see, I have 2. Now, 2 shares doesn't sound like a lot, but that's about $1,000 Canadian. That's just the way that I look at it. Nice. I would be very happy to add to that position, but I just don't think that's going to happen at the price that it is. So NEWT, which is my, I guess, second worst position, but third position that is really far down. I'm down 45% on this position. I do believe that this is even after I reinvested their own dividends at an advantageous time. They've just had a bad year. They've had such a bad year. They were down to $11 a share. Ouch. Again, you got to look at the debt. They had a lot of debt. They made a huge acquisition that they probably couldn't pay for. They diluted everybody, all the shareholders. Damn. Yeah, we're just gonna let them reinvest their own dividends and see what happens from there. I have 42 shares. They are turning into a holding company, so they're turning into much like Berkshire Hathaway, where they buy stocks or they help startup companies and then they hold shares of those companies past. So they have plans in play, but damn. Moving on, Nexus REITs down 15%. Nexus REITs reinvesting dividends, $1,000. RY, I'm up 17%. Damn. That was somebody, one of my subscribers said I got to buy one share of Royal Bank of Canada. They ended up being the best bank. They ended up being the only profitable bank this year in Canada. They're doing well. They're doing very well. I'm not in the finance. I'm a tradesman, but I own a lot of financial stocks. A lot of Canadians own a lot of financial bank stocks. Bank of Canada. Scotiabank, TD, all these banks, a lot of people own because of the dividends and the dividend growth. That's why I'm here as well. Nexus REITs, I guess we could talk about that real quick. Even though I'm reinvesting the dividends, I did put more into Dream Industrial. I'd rather Dream Industrial than Nexus REITs. Their payout ratio is just getting way too big. Smart Center REITs, down 15%. I don't know much about them. I never really did look. This was another friend suggestion. If I was gonna sell anything in my portfolio, it would probably be Smart Center REITs, and that's just because it's a $150 position, and I don't know enough, and I'm not a huge believer in commercial REITs. I don't love the idea of malls. I think that a lot of in-person shopping centers are being taken over by just shopping online like everyone does now. I think that there's a need for it, but I just don't see it being a necessity. I like to keep my portfolio. I like to keep a lot of these stocks that I own necessities, and I just don't see that with Smart Center REITs. I mean, I could be wrong. I mean, we're about to talk about Walmart. I mean, I own dollar stores, but I do see those as more of a necessity than like a shopping mall full of clothing stores and brands that I do not care about. VIG, the Vanguard Dividend Appreciation ETF, I'm up 7%. This did replace my Vanguard, what was it? It was another Vanguard ETF that was just a high dividend yield, a Canadian high dividend yield ETF. I got rid of that one. I replaced it with VIG, which also owned Home Depot, Microsoft, and Apple, and a few other stocks that I already owned. So I was actually using this as a way to double down on stocks that I already owned. So I have, you know, $500, not $30. It's not doing anybody any harm by being there. I leave it. Rather than just, you know, selling it and then buying the underlying stock, I'd rather just leave the ETF there. Walmart, I mean, it's clutter, but I like it. Walmart, I'm up 18%. I believe Walmart had a bad year. Take a look. Oh no, Walmart's up 10%. I'm up 18%, 19%. Well, that's not bad. If Walmart does have a bad year, I would love to buy more. I don't see that happening. I might, you know, my cost average is $132. If it went back down to about 120, 122, you know, that low there, I would like to buy it. Yeah, I could see myself pulling the trigger and buying a bit more. I do believe in Walmart long term. I believe people need a cheap place to go shopping. So I will buy more Walmart. And then Xeqt, which makes up the core of my portfolio. This is actually new. So this here, it is up 14%. I am up 7%, so half of what it is. Over 5 years, it is up 38%. But just talking about this year, it's been relatively flat. However, this is also the first time I've seen this stock so positive in my portfolio. So I don't think I've ever seen it past 3% positive. Now it's almost 7%. It is $15,000. It is almost 20% of my portfolio. It would have been a lot more if it did better than other stocks, but even though I kept putting money into it, the ETF moves slowly up and down, which is why it's here. It's here to take the edge off of my singular stock picks, the same way as Berkshire Hathaway is there to take the edge off of my personal stock picks. Even though Xeqt and Berkshire Hathaway, I am still trying to buy at an advantageous time. It just, it's a little more comforting to put my money into globally diverse ETFs, especially when I'm taking a lot more risk by trying to value pick singular stocks. You know, I do believe in singular stock picks. I know a lot of people, that's all they have in their account. And I know a lot of people, especially other YouTubers, who pitch the idea of singular stock picks, and then you see their portfolio and it's almost 70% VFV. You know, I do believe in singular stock picks, but I also do believe in ETFs. And especially as an average person, I am using this as a hedge to my own bad decisions. Xeqt is there to save me. It's there for my retirement. It's there to stay. So I am looking forward to adding to that position to make sure that it is a more substantial piece of my portfolio. That's the year. This year I changed my I changed a lot of things in my YouTube account. I'm up to 750 subscribers just at the end of this year, which is, I mean, that's incredible. That's like I'm gaining 1 subscriber a day, which is, it's amazing. I also changed my little profile picture because it was like a black medallion with a little white face in it, a bunch of scribbles. You couldn't even recognize what it was. I'm surprised anybody found me. Now it's a big, weird, like off orange, like a dark orange color, which is, you know, it's one of my favorite colors. I have like a jacket the same color as that, and it's a $sign. I just think that moving towards something that might be a little more colorful, a little more vibrant, a little more noticeable is going to be a good transition for my channel, especially because you probably already noticed that a lot of my color scheming for my thumbnails are very samey. That's because I want to make sure people know it's me posting. So I'm trying to keep the brand and everything just one color. Anyways, thank you everybody for watching. Sorry if that was super boring, but that's the year. It's been just a big year of waiting. I mean, I only get to really only get to find fun times to buy. Very seldom when everything's just rocketing all the time. And this year we've seen a lot of movement in the stocks, especially in the up direction, because 2 years ago we seen everything crash like almost 30 to 50%. That was the fun time to buy. That I had a lot of fun 2 years ago, and this whole year has just been a lot of waiting, which is just how it's going to go sometimes. 25 and invested. Over and out.